Hey everybody, it's me, Gregory Mannarino, back for my post-market wrap-up for this not-so-lovely day, I guess. Depends on your perspective. Thursday, January 18th, 2018. So, alright, let's start off with this. The Dow Jones Industrial Average fell almost 100 points. Whatever. Not such a big deal. As a matter of fact, all of the major indices closed lower. Okay. The bond market sold off today big time. So we have a sell-off here in the bond market, pushing yields higher. The U.S. 10-year yield, 2.62%. The spread between the 10 and the 30-year debt note is under 30 basis points. It's only going to get worse, I think, in my opinion, right here. The dollar also sold off. So we have a sell-off here in the stock market, a sell-off here in the bond market, a sell-off here in the dollar. Well, wouldn't you believe it? They managed to push gold and silver prices lower in this environment. I mean, this is unbelievable. You remember the London gold fix? Look it up. Criminal. It's absolutely criminal here, people. Anyway, so here's the story, seriously, and I posted snapshots of this throughout the day on my social networks. At one point today, the bond market tried to recover. Subsequently, stocks tried to recover on the back of that attempted recovery in the bond market. Couldn't do it. It looks more like a dead cat bounce to me now. Here we are. Again, most of you have heard me mention Jeffrey Gundlach. This guy, in my opinion, is one of the smartest guys on the street. He's saying that a 10-year yield of 2.63, we're at 2.62, is a danger zone here for the bond market. Now, understand, let's put a perspective on what's going on. For now, a decade, the Federal Reserve has been involved in artificially suppressing interest rates, buying up everything in sight, inflating their balance sheet larger than the GDP of most countries on earth. The debt market is in a bubble that is hard for anybody to get their head around. Now, the issue is, and again, this is not just Greg Mannarino anymore, who's talking about this for years, talking about a potential for a rapid sell-off in the bond market, which would cause yields to spike. Now, you just saw today the action with a tiny movement in the bond market can do to the stock market. It gets stuck. It can't go anywhere. It's like a deer in the headlights. Again, it's all fake. It's all distorted. It is all twisted. The market is massively overvalued, and it's only where it is because of the Federal Reserve, who has done everything they possibly can to reinflate a stock market bubble and a housing bubble to create a wealth effect. People feel richer, so they go out and spend, enriching the corporations, not thinking about how this can affect them in the long term. Margin debt, that is the cash that has been borrowed by individuals to participate in this stock market rally, is at historic highs. The people themselves are now burying themselves in debt again, just like they did last time. So the setup is here and the writing is on the wall, although this time is monumentally worse. So here's the story. People, mark my words, or mark Jeffrey Gundlach's words. If we continue to see bonds sell off, if some entity out here doesn't get in here and start buying up those bonds, there is trouble on the horizon like you have no idea. It's the truth. And we've seen this before. The euphoria at the top of every other bubble. Let's just go back to 2008. The mainstream financial pundits out there with their big smiles and their gleeful attitudes talking about the stock market hitting record after record, and then within a very short period of time those smiles got wiped off their faces. Same exact thing happened at the top of the dot-com bubble, where we saw the bond market doing exactly what it's doing now, both of those times. You understand? It's like deja vu all over again. So let's pay attention to this bond market. I cannot stress this enough. Please just watch it right on my website, traderschoice.net. You can watch these videos right on my website at the same time, watching the bond market and every other chart that I have there for you: gold, silver, derivatives of all of the cryptocurrencies. Well, at least some of the top ones right now, if you're interested in that too. Forget YouTube. You should be watching my videos there so you can pay attention to all of these charts at the same time. It's free. Why not take advantage of it? So tomorrow is going to be interesting, especially with this threat of a government shutdown. Personally, I want to see this market melt down and get to some type of a reality. It's the truth. I'm out of it right now. I have no open trades at all. I'm sitting in cash waiting to see what happens. And I think that's a good idea for everyone here, at least at this point, until we get a handle on what the bond market is going to do. If we see a continued sell-off tomorrow and yields continue to spike and we get this spread between the 10 and the 30-year less, that means that yield curve is flattening out, we got problems. We got big problems. Now, you know, you can speculate all you want about when, and now I'm not even saying if anymore, when that yield curve completely flattens out. The Federal Reserve, understand, cannot normalize their balance sheet fast enough, in my opinion, to stop an inversion. So when we get that inversion, when we get that absolutely flat yield curve, how long do we have? A lot of people have written to me before we get a meltdown. I mean, your guess is as good as mine. If we use history as a guide, 6 months to a year. But it could be, but we've never been here before. Understand this? This is an environment of, and I cannot stress this enough, extremes like we have never seen before in the financial world. So who knows? This could come down at any moment, and we're going to take advantage of it, no matter what happens. Understand? So, all right. So with that said, again, let's just summarize. Bonds sold off, stocks sold off, dollars sold off, and they managed to push gold and silver lower as well. Unbelievable scenario. But again, let's watch that bond market. Let's allow the bond market to tell you and me what we should be doing. If we continue to see this bond market sell off, it could not be more simple. We stay out of the market or we go short. If we start to see bonds being bought up in a meaningful way, we get long the stock market. You understand? It could not be easier for you. I cannot stress this enough. So no matter what they do, no matter what happens in this market, there's going to be winners and there's going to be losers. You and I are going to win like you have no idea, because we're going to get on the right side of this no matter what happens. It's that simple. And I will continue to post my trades up here. You've been following my trades, people. Have you been following my trades over the past few months? You have to admit, I don't think there's a trader out here probably on earth with a better record than mine over the past few months. And I'm not just saying that because you all know it's true. I've been posting my positions, opens and closes, telling you what I've done with them. But again, it's not that hard. If you just put these few metrics together, you can kind of gauge what you need to do. Just like now, we're waiting for the bond market to tell us what to do, and then we act. It's that simple. Not like the idiots who are sitting there looking at the stock market. Oh, what's the Dow Jones Industrial Average doing? Oh, it's going up. So maybe I should buy calls. No, it's idiocy, that kind of thinking. You know that. All right, with that said, I'll see you in the morning. I cannot wait to see what happens overnight. Keep your eye on the bond market overnight too, and it'll give us an inkling as to what might happen tomorrow. If we don't see some, and you know who it is, the major banks who are guaranteeing the debt through the mechanism of a credit default swap. I spoke about this recently. If we don't see them start to buy up that debt in a meaningful way, we got problems. Actually, we don't have problems at all. Other people do. You and me, we're going to rip its face off so absolutely cleanly, it's going to be unfreaking recognizable. All right, with that said, see you in the morning.